Hey guys, welcome back. Going over Coinbase today. My name is Stock Rock. Let's dive right in. Kind of go over the earnings for Coinbase, some opportunities, risk, and crypto's on a tear right now. And Coinbase is down a little bit. So let's break down. If Coinbase did deliver on its earnings for investors, did it stumble? And look at some financials, growth drivers, analyst targets, and whether if this is a golden opportunity or not. So, headline for quarter 2 2025, all the numbers. Revenue came in at $1.5 billion, up 3.3% year over year. But below the 1.56 to 1.59 billion Wall Street expected. So they did not beat earnings. And the year over year, wow, that is brutal. Adjusted EPS, earnings per share, came in at $5.14, massively beat analyst consensus. But this was flattered by one-off investment gains. Core non-GAAP EPS was just 12 cents, a 91.9% miss against estimates, down sharply from a year ago. Adjusted EBITDA came in at $512 million, margin pressure from rising costs and major data breach charge. So they had a lot of one-offs in this quarter. Transaction revenue, $764 million, down 2.1% year over year. Hurt by softer trading. So I think a lot more people are moving to different exchanges. This is the first time I'm looking at Coinbase's numbers, so bear with me, but this does not look good so far. Subscription and service revenue came in at $655 million, up 9.5% year over year, driven by higher stablecoin income. So some key financial trends and percent changes. Revenue year over year up 3%. Transaction revenue year over year down 2%. Subscription revenue up 9.5%. Expenses year over year, operating expenses soared 37.5%. You never want to see that, especially when revenue is only going up 3%. That is pretty bad. So it was soared. Operating expenses soared to $1.5 billion, including a $308 million one-off hit from a data breach. Wow, that's quite a bit, but still. Even with that one-off, that's a lot of operating expenses. Cash and debt, quarter 2 ended with $7.5 billion in cash, down 11.8% from 2024. Long-term debt up 62% to $2.9 billion. Ouch. Operating cash flow came in at $145 million, 83.7% drop from the first half of 2024. All right, so let's talk about some opportunities. Even though that was pretty rough, Bitcoin sits shy just of the record of 122,000. Total crypto market cap tops 4.1 trillion. Institutional crypto investments and adoption remains very strong. Coinbase added to the S&P 500, bringing fresh investment flows. ETF inflows and growing stablecoin revenue stabilized even during trading downturns. New base super app expansion into custody and derivatives market. Legislation and regulation recently passed the Genius Act and other pro-crypto federal laws, has seen regulatory tailwinds for Coinbase. So that is some pluses, but now let's look at the headwinds and the red flags. Revenue miss was pretty bad, failed to meet expectations due to reduced trading, especially from retail investors. So I think that's a lot of competition coming in and just other options for people to trade crypto. Margin pressures, operating costs surge, exacerbated by higher security and compliance spending and a costly data breach. So that costly data breach really hurt them this quarter, but their expenses were really high and their revenue wasn't going up enough. Highly volatile, dependent on market sentiment. Bull market could reverse quickly, core earnings swing with crypto volatility very quickly, and the regulation. Dilution and debt. Private placement of $2 billion in convertible notes increases leverage and may dilute shareholders. So basically when they dilute, they're issuing more shares, so it makes their shares less valuable. Think of a piece of pizza. If you're cutting more slices, your piece of the pizza is going to be a lot smaller. Some mixed signals with the price targets. Bernstein, $510 price target, and we're currently at $327. I forgot to mention we are at a 31 PE, which is pretty high for general stocks. Oppenheimer is at $413. Barclays at $352. JP Morgan at 215, CFRA 325 at a hold, Citi 270 at a buy, even though we're at 327. Piper Sandler at 180, they're neutral. Consensus is around 349, and we're at 327. So Coinbase is thriving off the raging bull market, but since quarter two earnings, the stock is down. Results, it did result in both the power and the pitfalls of being tied so closely to market sentiment. Makes it very tough for a company like Coinbase being directly tied to all these crypto coins, and then also regulations and ETF inflows, new product lines. Especially if crypto prices keep climbing, but make no mistake, rising costs, increased competition, and fickle trading activity means risk remains sky high. Analyst targets range from $180 to $500, illustrating how uncertain people are on Coinbase. So this is a classic play on crypto momentum. It is overall a strong company, but this earnings was pretty bad. I think I would rate this at least a D. So let me know what you guys think in the comments if you buy this stock. I'm definitely not touching this stock. But thanks for watching. Stock Rock. Peace.